that average hourly earnings, because if that's a miss, I think that's still ultimately a miss for the U.S.
That's true. It really comes to what the forecasts are and what the numbers come out at. Right now, the consensus forecast for non-farm payrolls is about 978,000. For average hourly earnings, the consensus forecast is 0%, but there's some banks that say that it could actually fall negative. Blake, what are your thoughts on NFPs? What do you think are potential scenarios for the different numbers that come out?
Well, thanks for having me here. And Chris, nice to be head to head with you today. As far as non-farm payrolls go, the whole market's looking for a strong number. And, if you look at all the estimates, they range from 800 some thousand all the way up to about 2 million. I think Jeffries said 2 million. And I think the jobs numbers are going to be good. Now, the question is, are they going to be really good? Or are they going to be, they're going to be good what the market expects? So I believe that if we create like 1.2 million jobs, 1.3 million jobs, that's going to be within expectations. And the market's just going to take that and say, all right, well, this is what we expected. Risk is going to continue higher, that type of thing. But I think the risk for today is going to be if the jobs are a blowout number. If the jobs come in at, let's say 1.4, 1.5 million, unemployment sinks to like 5.7, 5.8%. I think that would be a little bit of a stretch. But let's say the numbers are blowout. I think the market goes a lot higher and then reverses because, as Chris said, and I agree, tapering, the market's already assuming the taper talk is going to be coming. It's going to be coming in June. It's going to be coming around the Jackson Hole Symposium timeframe. But what happens if the market has to start talking about that or thinking about that even earlier than had been expected? And that's why I think a blowout number is actually going to worry the market more than anything. And I'm hoping for a blowout number because there's nothing more than I'd love to see than the S&P spike up to 4,300 and to be able to sell some risk, buy some dollars on that, because I think the dollar's been beaten down. Mm-hmm. But it's also consolidated quite a bit, even with stocks at all-time highs. So, that's how I'm feeling about it today. I was going to agree with you, Chris. It is more of a contrarian play. I mean, the dollar is the redheaded stepchild right now in the current environment. Right. But it's held up really well, and you can't deny that. Now, one of the other things, technically, the euro, the bounce that just occurred this week in the euro, or the dollar sell-off, it did stall at like the 618 fib level. And that came in at 120.86. We've been looking at that level all week this week, in the Forex analytics community. I mean, we literally stopped there at 120.88, maybe or at 90, 120.90. So within just a couple pips of that number, I think that's going to be a big level for today. So if you really want to see the dollar continue to go down, you got to see the euro regain 121 today. If we take out 121, then I think the dollar is, going to be punished across the board.